Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on stock volume when trading. If you're new to the stock market again is a battle between the bulls and the bears, right? Buyers and sellers. Bulls mean the stock or believe that the stock is going up. Bears believe that the stock's going down, and then they have that tug of war, and it's the buyers and the sellers, right? So what happens is every time a stock is bought or sold, it leaves volume, right? So when people are buying and selling shares, it creates volume, which hits the scanners. Now, volume is incredibly important because it shows the level of interest between the bulls and the bears. And the more volume that comes in, the more liquidity. So the easier it is to get in and out of your position. The less volume that there is, it's going to be harder to get in and out of the stock. Now, many of times when there's higher liquidity, right, more volume coming in, the bid and the ask spread will be tighter. So it's, again, much better for risk management. Whereas if, the spread is too wide, right, 10, 15, 20 cents, you're going to be down on your position more, and the risk management is not going to be as good. So, volume is very, very important. You'll notice, on the bigger stocks, the higher the volume, again, you'll get really tight bid-ask spreads. I'll show you again. Let's pull up Apple, APL. You'll see here when I go to the trade button, you'll see, on a pretty large price stock here, a 3-cent spread, that's pretty darn good. Now, when you start to get into lower float stocks that don't have a lot of volume, then you might start to see the spread widen. It might go like, even on a 2 or 3 or a dollar stock, you might have 15, 20 cent differential between the bid and ask spread. So that's when it starts to become very difficult for risk management. But then many of times when the stock becomes very liquid on the low floaters, then you'll see a lot of times that the bid-ask spread starts to tighten. Again, it's all about liquidity and being able to get in and out of your position. Because if you want to buy a stock, you need a seller. If you want to sell a stock, you need a buyer. And again, that transaction that takes place between the buyers and the sellers leaves volume. And you'll see on a chart right here, here's my Thinkorswim platform. You'll see this section that shows volume, right? And you'll see there's a bunch of volume bars here. And if you go back here, you'll see many times the stock will kind of just trade sideways like this. You'll see stock kind of trading sideways, riding the moving average lines. And then you'll say, boom, see this right here, big green bar, right? That's bigger than these other bars. Volume coming in. This is the bulls coming in, trying to push the stock up. So it's kind of riding the moving average lines. Boom, breaks out. You'll see this gap up with coinciding with volume. This is the bulls trying to push this stock up, and you'll see they did, right? So it kind of pushed it up and started riding these moving average lines. And then you'll start to see over here, some big selling volume. Now it's at a kind of a crucial point right here at a support level right near the moving average lines. What's it going to do? You'll see a big seller coming in here, or lots of selling volume coming in, but then you'll see the buyers kind of came back, not as much volume, but kind of held it, moved up a little bit more. And then you'll see many times, just when a stock starts to sell off, it doesn't always get huge volume bars. Sometimes the volume bars will come in a little bit later as this thing starts to tank. You'll see some really big selling bars right down here. So many times when you see a bigger bar, it's not going to always be a bigger candlestick. So just because you see huge candlestick or selling volume right here doesn't mean the candlestick's going to be huge. But it's very important because, again, this battle between the bulls and the bears that takes place, it leaves trails. It leaves these candlesticks, and those candlesticks form patterns, and those patterns form very important support and resistance levels. Right? It's all about support resistance, buy low, sell high, or sell high and buy low if you're going short. You want to buy low and sell high if you're going to be a long trader. So when you understand this battle between the bulls and the bears, and you start to understand candlesticks and patterns, when you start to notice these volume bars, when they start getting these peaker levels, right? So you'll see it's kind of trading sideways and you get these bigger bars. These are very important because many times they'll tell a story. It's not always 100% foolproof, right? Just because you see a big buyer, big buying volume coming in or big selling volume Doesn't mean it's going to go one way or the other, but it's very important to pay attention to, because if that move doesn't happen right away, there might be another one coming. So again, very important to see. You'll see many times stock trading sideways here. Be aware of these big spikes in volume. Again, it's many of times correlates with news. So on big news days, good or bad, you might see higher spikes like this. Again, so this is on a stock like Apple. But if you're a day trader and you're trading these low float stocks, we love using trade ideas. We look at the gappers each morning. So if you're looking to day trade stocks, especially these low floaters, you pull up those gappers, and many times they'll have like very, big news days. Let's pull up one over here. Let's take a look at AXSM. This is kind of a smaller cap stock that's really up on the day today. So let's pull that one up here. AXSM. You'll see right here, lots of volume. You'll see 31 million in volume. Really a huge amount of volume. And look at right here. Look at this gigantic green candlestick here, or the green volume bar, when nothing's been going on with it. Boom, shoots right up, right? And you'll see over here, it looks like there's a bunch of news over here. Yep. So again, here's a kind of a lower float stock. It's kind of a medium to lower float stock. TD Ameritrade kind of overstates it here on the shares, but probably about 20 million or so. So on the lower end, kind of the higher lower end of float, but you'll see again, kind of a lower to medium size float. Get some news here today, coincides with this bigger green volume bar, and look at this, boom, huge gap up, right? So this is very important because it shows you, news, and boom, stock moves up. Now you got to be careful, especially on these smaller cap stocks. Just because you see a big green bar doesn't mean, I should buy it now or buy it tomorrow. It's going to continuously go up. No, you got to be aware of, obviously, again, very overextended right now. It may go up, might have a second day or a third day, some sympathy days, and then at some point, it's going to pull back. These, you can see these low float stocks, they're traded, up and down a lot. But just wanted to show you the kind of the differences in the correlations, between low floats and high float stocks. We'll see right up here, let's go in here. This is not bad. It's a 3-cent spread. So not bad. That's, it's, 2 to 3 cents. So that's pretty good. But on a day where, let's say it didn't have news like this and it wasn't very liquid, you might start to see this spread move to, 8, 9, 10 cents. So that's where you want to be careful and you want to be aware of volume, because, and especially on these stocks like this that, start to 30 cents, $1, $2. If it doesn't have a lot of volume and the liquidity's not good, it's going to be harder to get in and out of the position. So again, volume plays a very important role when trading, no matter what time frame you're trading on. Again, it's not foolproof. Nothing is 100% foolproof in the stock market. You got to look at things together as a whole. But volume, especially at specific or very important support and resistance levels, it plays a very important role.